What's up traders, welcome to Failure to Displace, and in this video we're going to take a bird's eye view of the London trading session in today's market on EURUSD. This is the level of analysis that I'm trying to achieve in real time. So I've come back in hindsight and these are the key standout moments through today's session that would lead me to take in trades. So let's dive into this and see what we can kind of dig in when we're going back into the session. So first off, I want to point out this larger section which was put in the Asia trading session. This is a 15-minute fair value gap. And inside this 15-minute fair value gap, I have highlighted the lowest swing low. So we do have liquidity inside a higher time frame fair value gap. We're currently on the 1-minute time frame. We can see that Asia put in a high, and then in the gap time between the Asia session, which is this blue shaded box, and the London session, which is this pink shaded box, we swept the high, put in a gap time high. This high was put in at the start of the European session, so 1 o'clock in the morning. So I have heard it from Stacey Burke. A lot of potential trades can happen the hour before the session starts. So this could have been a potential entry that you may have been interested in trading in. My session doesn't start while 2, so I wasn't active at this point. So there was an aggressive entry before we've come back into the range, which was here. Break of structure, fair value gap, and a breaker block. So I've highlighted this breaker block here. So price came up, tapped the bottom of the breaker block, 50% of the fair value gap, and then accelerated away. So there was a trade at the extreme taking you back into the range. Price did come back again, retested this entry, and then dropped away. Price was able to drop away to touch the top of the 15-minute fair value gap. So that was a very solid trade. If you were to have entered there, you could have gained yourself stop loss just above the high, taking out relative equal lows there, I suppose, which would have been 3.5R if you'd have closed out at the top of the 15-minute. If you'd have highlighted that 15-minute fair value gap, potential 4R there. So that's all before the session even starts. If you were coming in to trade kind of the Europe Open prior to the London window, as I have it marked out. Into London, we can see the injection of volume that comes in at 2 AM. Price immediately starts pumping. Low resistance liquidity run. We've got all of these swing highs here that price has just pumped up into, taking liquidity back into our original fair value gap and breaker block, where it then pulls back into the Asia range. So this is where I would be at the charts, leaving a fair value gap here. What we're working on noticing at the moment, displacement candles. So this large bearish candle, much bigger than anything else around it, breaking over structure, leaving a fair value gap. We have displacement here back into the Asia range as well. So there's a potential short trade. Stop loss would go above the high in this instance, and you could run that then for the majority of the session, where it ultimately comes back, taps our liquidity that we highlighted in the 15-minute fair value gap, ultimately fills the 15-minute fair value gap before starting to pull back. So there was a fantastic 6R trade coming in at just before the new half-hour candle, in all fairness. So coming in at 2:26, 2:27 AM in the morning, 2022 mentorship entry there. We can see if we didn't get the first entry and we wanted to take displacement back in the range, there are other options to enter in here as well. Big fair value gap. We do eventually break structure and we pull back. What I've noted here, which is really interesting, is this bearish candle pulls back, taps this order block absolutely perfectly. So that's really, really interesting. We've got a tap of this order block, immediate rejection, pulls away. Again, breaking structure with displacement. These big displacement candles have left more fair value gaps. So as ITC does say, if you're on the right side of the market, these up closed candles should be acting as resistance as we're pulling down. So these are our order blocks. So every time we tap one of these order blocks, it should be repelling price, which it is doing. So again, another pullback into this fair value gap, touches it into these order blocks, rejects away again. There's multiple options to get in line with price action here. Based on the fact that we've analysed, we've failed to displace over the session high from Asia, and we are back in the range. Our target, which I haven't pointed out to you guys yet, apologies, would be the session low, which is down here. Why isn't that showing? Untapped green liquidity down here, which is our Asia low. So that would be the ultimate target for this move. Fails to get there, we take this liquidity, we pull back. We're pulling back into lo and behold, optimal trade entry. So we come back, we sweep this liquidity of the fair value gap, we pull back to optimal trade entry. Again, tapping a fair value gap, pulling away from the fair value gap, leaving in this area. So we've established we've just tapped optimal trade entry. We have this fair value gap highlighted. We are now in silver bullet hour. We should have a bearish bias because we've seen our untapped liquidity is the Asia low. So that would be my draw on liquidity. Tap this fair value gap, we've left here a balanced price range. So this is a bullish fair value gap followed by a bearish fair value gap. If you've seen any of my previous content, you know I love balanced price ranges. They're a really good indication of price reversing. Price does come up, again respects this fair value gap, drops away. So we leave a fair value gap, price comes back up again, respects this fair value gap, comes in higher. So this was the bit of a sucker. You wanted to be in on this first balanced price range. That would have given you the, if you were following my strategy, this balanced price range would have given you your 1-to-1 5 pip stop loss, 5 pip take profit would have just got tagged. Price then pulls back, comes again for a second attempt at the low. If you were entering on this fair value gap, so waiting for this pullback, you would have been in the trade a little bit longer. So you're going to get tagged in. You're going to have to withstand quite a lot of drawdown for it to pull away. You've noted here that I have a breaker. So this breaker is based on these two bearish candles, the last bearish candles before price swept these highs. So I've classed that as a bearish breaker, which price comes up, taps the bearish breaker, and then rejects away again. Pulling away for the end of the session, we haven't taken the liquidity at the low, but we would have been able to achieve several good bearish trades based on this type of analysis. So I hope that was useful. Essentially, the bias was bearish going into the European session, so we would have been looking for opportunities to get into short trades because we had failed to displace over the Asia high, and we knew we had untapped liquidity at the Asia low. So in this style of range trading, if we fail to displace above a range high, we are going for the opposing liquidity, which would be the range low. As I say, it never actually hit because of the CPI, but there was lots of bearish entries where you could have been scalping and getting nice profits. So I hope that was useful for you. As I say, I've done this more as a bird's eye view so that I can see all of the possible analysis that I could put into a trading session, and this is the kind of stuff that I want to be taking note of moving forward. So this will be a good reference for me to look back, see how things were developed, and see if I can pull this kind of stuff off in live time. So if you enjoyed the content, please leave a thumbs up. If you have any questions, please leave it in the comments section below. And if you want to see more videos like this one, please consider subscribing. Videos are coming thick and fast at the moment. Thanks for watching, and I'll see you again shortly.